We've also got Nitin Raheja joining in on the show right now. Nitin, talk about the narrow move on the market, and off late it's only Reliance, and so is the story today as well, holding up 2% right now, and banks. Had it not been for these two clusters, maybe the fall could have been hard.
Well, it's a sense of deja vu, right? Even when we went into this crisis, it was a narrow market, if you remember. There was just the 10 names which were contributing for most of the gains, and that's pretty much continued even at the present moment. And I think that's really a reflection of the fact that if you really look at what kind of messages we are getting from the broader economy, it's very, very confusing. You talk to people at one level, you find that each company is doing far differently. Even within an industry, you find one company doing very well and the other not. So I think it continues to be a bottom-up market. There are a few sectors which have the broad tailwinds behind them, which are doing well. But even within those sectors, you see some of the stocks trading at extreme premiums. So I think this will remain a bottom-up market. I think companies who have been able to sort of shore up the balance sheet and have low debt, have some visibility of growth, are the ones which will continue to perform well. So I think it's pretty much business as usual.
Yeah, absolutely. But the point, Nitin, now on Reliance, you've got the AGM coming up day after. The stock is already nudging its all-time highs. We were just looking at the data. Reliance Industries is already the 51st in the ranking of global companies by way of market cap. Soon it's going to reach the halfway 50-odd mark as well. Would you say still opportunity to buy into Reliance even at 1900 plus levels? I mean, this is a long-term story we're talking about. Or would you wait for a dip and be patient to wait for one?
So I think if you are really taking buying into Reliance at the present moment, you need to really take a long-term view, because there's a lot of intrinsic valuation built into this because of Jio and the kind of deals that they've done, over the last couple of months as such. So, ideally speaking, yes, if the market were to correct, Reliance should also correct, and you should get it at a cheaper price. But I think the current strength in Reliance that you're seeing is more to do with the fact that the AGM has been used by the company to make some broad, large announcements in the past, and that's the expectation as we are going into the AGM, and that's probably why you're seeing the stock being so firm.
Sure. Kunal, just wanted to get you in on the charts of Reliance as well. This is moving from fresh high to fresh high on a daily basis. You're seeing 2 to 3% kind of gains at 1900 plus levels. What do you foresee on the charts? And could, ahead of Wednesday's AGM, could it be the case where you could see a buy on rumor, sell on news kind of a story? Is the stock looking toppish by any standards?
Well, as of now, it doesn't look toppish. In fact, maybe by the end of the day, the data turns out to be a bit different than what it has been over the last few weeks. Then the texture of the stock, or the short term view of the stock will probably change. But then there was something very interesting which panned out last week. And I think on Friday specifically, when the data came out for Reliance Industries, and I'm talking of the options or the F&O data, it just threw in a different perspective, because till Friday, first half, the stock was lingering around that 1800 mark. In the last hour or so, there was a mild bit of rally. The stock from 1800 levels to, it jumped up to almost 1870, 1880 kind of zone. So it was the only, I would say, the lone stock, or one of the few large cap names which managed to push up, on the large cap front when the Nifty was down 40-50 points. Now, the data was very interesting, because at 1800 plus levels, the stock had seen a build up on the 2000 call option, 2100 strike call option. There was built up even in the at the money 1900 call option. Now, when traders are bullish on a call option for a stock like Reliance Industries, which has moved up so swiftly and so much over the last 3-4 months, it just about tells you that this is more of a short-term expected move of a faster upswing on the stock. So it could be on the back of some news flow, it could be on the back of what could traders expect from the AGM as well. But as of Friday, at least and as of today morning, the data still indicates that the stock still has a fair chance of trying to come back and conquer even that 2000 mark. I think it's a fair possibility given the kind of open interest build-up we've seen in the option. So my sense, if you ask me, Aisha, I think the stock should head back towards that 2000 mark. 1800, 1850 now, I believe is now a support zone for Reliance Industries. So the supports have moved up higher, and the targets, of course, have come back into a range which is about those 2000 plus levels.
Okay, Nitin, let's get your view on some of these IT names as well, and then we'll get Chandra on the Wipro commentary from the AGM, some sharp commentary as well coming in from Rishad Premji. But we've seen the IT stock start to rebound even post the TCS commentary there. Markets reading into the outlook more than any weakness in the numbers. How are you viewing the pack, and what would be your preferred play there?
So I think clearly the IT play has become more of a defensive play because, what we have really seen, if you take the US markets also, you've seen the NASDAQ actually outperforming the broader Dow Jones. And that's led by the technology stocks and the fact that all these technology companies are, whether you take a, Microsoft, you take a Google, are benefiting from a huge amount of play that is happening on the digital side. A lot of these guys who are running huge cloud infrastructure are benefiting. Now, to do in this new era of work from home, I think there is going to be a large amount of spending that you're going to see in financial services, in many other areas for this whole transition to start taking place. And so I think the IT companies would benefit. Having said that, are they going to, go gangbusters in terms of growth? I don't think so. You're probably going to see growth which is going to be more towards the early teens and so on and so forth. But given the quality of businesses that they are all cash flow positive companies, in terms of corporate governance, they are far better than a lot of other companies. I think, and also the fact that you will see the rupee sort of weakness helping their case. So I think IT is a space where people are really going and parking themselves more from a perspective of defensive plays at the present moment.
I wanted to get in your take then. How are you looking at the overall onset of monsoon and how that could really aid the overall rural theme? That as well is an area that a lot of corporates have been alluding to, be it for the auto sector or even some of the FMCG plays. Is this a theme that you would be betting on for the long haul?
Oh, absolutely. I think that's one of the saving graces that we are seeing, because the whole COVID pandemic issue has been globally has been more prominent in densely populated areas, and so urban areas have been more badly affected. So I think clearly rural has seen, after 2 good years of crop and a good monsoon even this year, also further the kind of investments that have been directed by the government towards the rural areas, and one of the broad reforms that was announced in terms of the whole APMC reforms are very exciting times. Hopefully this finally starts unlocking the rural economy in a big way, because don't forget that over 60% of India's population is dependent on the rural economy, which is roughly around contributes barely anything to the overall GDP. So it's a distortion. I think if this starts getting addressed, if this starts getting changed, this could be a big thing. We are very optimistic of the rural play story out there. We are playing it through the agrochemical sector. We are playing it through owning some tractor companies in our portfolios. And yes, I think 40% of FMCG demand does emanate from the rural area. That should sort of be one of the savings. It's not going to be enough to compensate the FMCG companies for the demand slowdown that we have seen in the urban areas. But yes, most definitely, I think it's one of the shining spots as far as the Indian economy is concerned.
All right, Nitin, let you go on that note. Appreciate your time. Thanks much for joining in with that view. Kunal as well, thanks for that technical take. We'll take